Police guard like BlackRock just changed the Bitcoin game forever. While everyone's panicking about Bitcoin crashing, the world's largest asset manager just launched a new ETF that pays you income just for holding Bitcoin. This could trigger the biggest institutional money flood we've ever seen. Here's what just happened. BlackRock rolled out a brand new Bitcoin ETF that's completely different from their regular spot Bitcoin fund. This one uses something called a covered call strategy. Translation: you get Bitcoin exposure plus monthly income payments. It's like owning Bitcoin, but getting paid dividends for it. Think about that for a second. Traditional Bitcoin doesn't pay you anything while you hold it. You just wait and hope the price goes up. But BlackRock figured out how to make Bitcoin generate cash flow, like a rental property or dividend stock. This is exactly what big money institutions have been waiting for. So how does this actually work? Let me break it down super simple. A covered call is when you own Bitcoin, but sell someone else the right to buy it from you at a higher price. You collect a premium for that right. If Bitcoin stays below that price, you keep the premium in your Bitcoin. If it goes above, you sell at a profit anyway. Either way, you're making money. BlackRock is doing this automatically for everyone who buys their new ETF. You don't need to understand options trading or manage anything yourself. You just buy the ETF and start collecting income. It's Bitcoin for people who want stability and cash flow, not just moonshots. Now here's why this matters way more than people realize. BlackRock manages over $10 trillion. When they launch products like this, they're not experimenting. They're responding to massive demand from pension funds, insurance companies, and wealth managers who can't just buy regular Bitcoin. These institutions have rules. They need income-generating assets. They need monthly cash flow to pay retirees and policyholders. Regular Bitcoin doesn't qualify, but this checks all their boxes. Bitcoin exposure with income generation. That's the holy grail for institutional money. And this connects to something even bigger happening in the financial system right now. The ISO 20022 banking standard is going live across the world. This is the new global language for money movement. Banks, payment systems, and financial institutions are all upgrading to this standard. Why does that matter for Bitcoin? Because as the traditional banking system modernizes with ISO 20022, Bitcoin is positioning itself as the ultimate settlement layer. BlackRock launching income-generating Bitcoin products is them building the bridge between old finance and new finance. They're making Bitcoin compatible with the institutional world that runs on cash flow and compliance. Look at what's happening. XRP, XLM, YLGO, and other ISO 20022 tokens are being integrated into banking systems for fast settlement. Meanwhile, Bitcoin is becoming an institutional treasury asset that now pays income. These aren't separate trends. They're both part of the same massive shift. Traditional finance is absorbing crypto, but on crypto's terms. So what should you watch for next? First, check the inflows into this new BlackRock ETF. If billions start flowing in during the first few months, that's your signal that institutions are rotating from regular Bitcoin ETFs into this income version. That creates buying pressure. Second, watch for copycats. If this ETF succeeds, Fidelity, Invesco, and other major players will launch their own versions. More products mean more access points for institutional money. That's bullish. Third, pay attention to Bitcoin's price action around major options expiration dates. Since this ETF uses covered calls, it's tied to the options market. Big options expirations could create predictable price patterns. Smart traders will figure this out fast. Bottom line, while retail investors are scared and selling, BlackRock is building product for the next wave of institutional adoption. They don't launch products for assets they think are dying. They launch products for assets they believe will dominate the next decade. This is educational content only, not financial advice. Always do your own research before investing. But if you want to understand where the smart money is flowing while everyone else panics, you're watching the right channel. Follow Stack Daily 60 for daily crypto and money tips.